Welcome back to Survivanomics. I'm Sebastian, and today we're embarking on a crucial step in your wealth development journey. Step 6 is all about smart investment options and strategies. We've built a solid foundation, and now it's time to grow our wealth. Let's navigate the investment landscape together so it becomes easier to make investment decisions that align with our unique circumstances in the ever-changing world. As I applied the Survivanomics principle, my investment and tax savings account grew. My emergency envelope fund grew, and as my self-audits helped me get rid of unnecessary expenses, I began to see extra funds in my operating account that had been moved and invested as well. It was time to put the cash to work and accelerate the wealth development process. Investing isn't a one-size-fits-all game. It's all about balancing personal needs with the rhythm of the market. Remember, never invest more than you can afford to lose. Your rent, food, and essential family expenses must always be covered first. Also, keep in mind that this video isn't going to reflect the best investment on a given day, so I'm just sharing what I would do in my own situation, which means you should seek out professional advice that is right for your circumstances. With that in mind, I want to start with what a beginner might do first and get to more complex options after that. You have all this extra money saved and can't just let it sit there while inflation reduces its value. On the other hand, investing can sound and be complicated. So here's a simple way to start. I'd first take the saved dollars I have, open a tax-free savings account or a 401k if you're in the US, and tell the bank you want those savings going in this account. Until you're more familiar with investment options, invest in an index fund that has a solid long-term outlook. Find out why your advisor feels the fund they suggest has a solid outlook, and does it have a really good historical rate of interest return? What is the return rate, and how does the interest compare to other options? Once you've nailed down a place to put your money, keep moving savings in that direction until you decide on a new investment down the road. One other simple investment for those that are concerned about the stability of banking investments could be simply purchasing gold or silver at as close to spot price as possible. Spot price is the baseline market price for precious metals. Just be sure to see what is happening in the market before you do this, and seek advice from a professional in the precious metals market to see if it's a good time to buy. Okay. For those who want to get a bit more advanced, you also have to look at the bigger picture as well. Market trends, global events, and economic cycles play a significant role in investment decisions. There are some common misconceptions around the art of timing the market. While it's true that timing the market precisely is challenging and not always advisable, understanding broader economic trends can be a helpful guide in making more informed investment decisions. Consider macroeconomic indicators. For example, a surge in global oil production typically leads to lower oil prices, impacting the value of energy funds. Knowing these trends can guide you in when to enter or avoid certain investments. Similarly, rising interest rates often lead to a decrease in the value of precious metals. In the tech industry, taking note of how popular virtual reality is becoming now might suggest a prime moment to look for stocks or funds that give you a piece of that action. It's about finding the right moment to invest based on broader economic movements, not just daily market fluctuations. Now, let's talk about investment goals. Traditional advice often revolves around risk tolerance and specific financial objectives. While these are valid points, they sometimes miss the mark on what we really want: profitable investments. It's not about aiming for minimal returns, it's about maximizing them within our comfort zone of risk. Part of covering the risk concern is done by simply picking a diverse and strong set of well-researched investments that you want to see do well across the board, even if some will do better than others. In my own experience, I get a lot of great return on investing in what I value. For example, I've invested in film equipment that has expanded my film work and my profit. I've invested in precious metals because I value my ability to be autonomous from the financial system if it's necessary. I have jumped into real estate because I like what land and property provide as an experience. I could go on, but you get the point. There should be something you connect with when it comes to investing. Your passions can be part of your investments as long as you consider the strategic aspect of them. A standard bank advisor might offer you generic options that are basic for the student, the steady career saver, or the retiree, but these boilerplate options aren't always aligned with current market dynamics. This is why it's crucial to do your research, explore various investment options, consider your personal risk tolerance and the current market conditions. Are precious metals low? Is it a good time to enter the tech sector through an ETF? These decisions should be informed by both your financial situation and the state of the market. With this understanding of market trends and realistic investment goals, you're better equipped to make decisions that aren't just safe but are also potentially more profitable. Now let's move on to exploring specific investment options in detail. As we explore some of these investment avenues, keep in mind your personal risk tolerance and the market conditions. I'll admit that I saved up quite a bit when I launched into my Survivanomics investment phase, and my risk tolerance was quite high for some early investments. I had contacts for advice in the crypto space, and luckily I did okay. Not amazingly, but okay. That said, crypto has not gone smoothly for some, so be sure to do your own research and pick the investment that is right for your situation. There certainly are more investment options than we'll discuss here, but we'll look at a good number of areas that will provide you with a variety of investment options to consider initially. Cryptocurrencies. These are high risk, but potentially high reward. The crypto market is volatile, but as digital currencies gain traction, a well-researched investment in stable cryptocurrencies might be worth a portion of your portfolio. The digital currency market will not be going away, so if you find the right investment in this sector, you could see solid returns over the next few years. Business ventures. Investing in your skills, services, or products can yield rapid returns. Whether it's upgrading equipment, marketing, or learning a new profitable skill, investing in your business or side hustle can be a game changer for enhancing your financial growth. Precious metals. In times of economic instability, converting some cash into precious metals like gold or silver can hedge against inflation. They may not yield high returns in stable markets, but they're a safety net during financial turmoil, and historically gold and silver have regularly been the currency of choice when trusting paper currency begins to falter. ETFs and index funds. These are generally good bets for steady growth, especially outside of any major market crises. They offer the advantage of diversification across various market sectors, and if you're investing through tax-advantaged savings accounts like 401ks or TFSAs, they're even more beneficial due to their gains not being heavily taxed. Additionally, the management fees on these types of funds are typically much lower than with standard mutual funds, and they can spread your risk over multiple strong market performers. Real estate. This one usually requires a substantial investment of more upfront capital, so it's an option for when you've accumulated more savings over time. However, it's not just about buying property at any time. A good real estate deal is about good math. You must look at rental income versus mortgage, interest payments, taxes, maintenance. Does it add up to a profit? Not every property will be profitable. Maybe spreading out your risk by getting into a multi-unit building could improve your chances of profitability. Or you may find low-price deals via taking your chances on foreclosure and tax sales. If you'd rather share the risk, don't forget about options like REITs, which are real estate investment trusts, or leasing land that you own to land users, growers, and farmers. Stocks. These require thorough research. Diversifying across multiple stocks is key to mitigating risks. Also, be mindful of trading and management fees. Choose a platform that aligns with your investment strategy and frequency. Even if some fees are waived by meeting certain investment thresholds, get this clarified in advance. You'll find that some trading accounts are self-driven and have fewer fees, so it may be a good option when just starting out with lower balances to use one of those. High yield interest savings account. If you have a surplus of savings and still feel you need more time to look at which investment options are best for you, it might be a good idea to look for the best high-interest savings account you can find and park your investment money there for now. Some of these accounts can offer as much as 5% interest for cash on deposit. That's not bad compared to some smaller yield investments, and it's better than letting inflation eat away at your money over time. As we've accumulated savings in our jars, it's time to make them work for us. But remember, cash itself isn't wealth. It's a store of value that shrinks over time. Our goal is to protect it from inflation and grow it over time. To ensure you protect and develop your savings, watch the market trends. Is now a good time to buy precious metals, or should you invest in an index fund poised for growth? Perhaps dive into crypto after thorough research, or save for that down payment on a real estate investment. The key is to stay informed. Avoid sitting on large amounts of cash savings that can lose value, and make moves that align with your goals and the market's pulse. But even when you have done this, don't forget to regularly review your investments so you can adapt and adjust them as market forces require. I challenge you to apply these strategies. Start small, stay informed, and grow your wealth. Learn from the success of others and share your journey in the comments. What investment choices are you making, and how are you aligning those choices with the current market situation? Share what you can in the comments. This is the essence of building wealth, and by embracing each step of the Survivanomics journey, you'll transcend mere survival. You'll be actively thriving. Through deep understanding and strategic engagement with the world of investments, you'll do much more than merely save money. You'll actively craft a pathway to prosperity. As we conclude the current series of Survivanomics, I invite you to share your feedback and questions below. Your active participation could spark the creation of a second season, delving even deeper into the intricacies of informed wealth-building decisions like generational wealth havens, business write-offs, and more. Remember, your journey to financial empowerment is just beginning, and together we can continue to explore and conquer the landscape of financial success. Like, subscribe, and share if you're finding value in our series. Together, let's turn our financial narratives into success stories. On that note, fight the darkness, put truth in story. We'll see you next time.